Berkshire Hathaway Chairman and CEO Warren Buffett joining us.
स्टॉक मार्केट रिलेटेड इंटरव्यू वीडियो पाने के लिए मेरे चैनल को सब्सक्राइब करें और बेल आइकन को दबा दें।
So, are you relieved to hear of the deadline being extended and being pushed off? That March 2nd, it's not all going to go to 25%.
Well, I'm relieved at the idea that there's still some chance that sense will prevail. It is bad for China. It's bad for us if we get into some kind of a trade war. And negotiations are tough in something like this. This is a big deal to both countries, and to some extent, you're playing a game of chicken, and because it hurts both countries. And I generally think when two very smart countries have something very important at stake, they'll end up making rational decisions. I mean, I've been figuring that way with the Russians ever since the nuclear bomb. That even though you get all kinds of tensions, and people generally figure out what's best for themselves, and the best thing for both China and the United States is to work out something sensible that both sides can live with.
Did you think there was valid reason for amping up these negotiations, for saying, hey, hang on a second, we're not getting a fair shake?
Well, I think we haven't been getting a fair shake to some degree, but I think we can sustain, I mean, to some extent, the United States can do things that no other country can do. So as I think a number of smaller countries, for example, if they want to run trade surpluses with us, I mean, and it strengthens their economy, it doesn't hurt us that much. I mean, I think we've got a role to play in the world that way, but I don't think we can be Uncle Sap either.
Joe, you have some breaking news?
Yeah, out of General Electric, breaking to a lot of us that we realized GE had this much money tied up in biopharma. The company General Electric is selling its biopharma business to Danaher. Kind of interesting, Danaher, for $21.4 billion, and $21 billion of that will be in cash. GE says it's going to use the proceeds to reduce leverage, strengthen its balance sheet. It expects the deal to close during the fourth quarter of this year, and there's a lot of comments about how from Culp about how this is in keeping with their plan to reduce leverage, strengthen the balance sheet, and all the other things. The deal, Danaher, meanwhile, sees the deal adding 45 to 50 cents to adjusted earnings per share in the first full year. And instead of us talking about this, Becky, me or you, I guess we should get Warren's comments on what he thinks of this move.
Let's do just that. And I do want to bring up, this is something, Warren, that we got viewer questions about, too, randomly. GE. Control Room T102, Brian Savage wrote in, Mr. Buffett, given the recent turmoil with GE, do you believe Larry Culp is the right man for the job? And if you could advise him, what would you inform him he should do? Lastly, if he is the guy, why haven't you invested in a company like GE, given your current funds?
Yeah. Well, I think you should sell the medical operation for $21.4 billion to Danaher. I mean, that sounds. I think that GE should deleverage. No great insights there. They believe the same thing, I'm sure. They owe more money than they should at present, and they should sell assets to some degree, not in a fire sale at all. And this is not a fire sale price. So I applaud what was just announced, and I've met Larry, had a terrific record at Danaher, we are a big customer of GE. We are a big supplier of GE. I've had some connection with the company for decades, and they did call us in 2008 when they needed money, and so. I think all America is cheering for GE, but I'm certainly one of those that is cheering.
Have they called you more recently?
Well, I've talked to them off and on over the last year or two, but I've said the same thing pretty much as what I'm saying right here.
Mm-hmm. Joe, you have other questions on this front?
Not so much on that. I got a lot of things, obviously, that we want to talk about, and I guess Warren probably does know GE pretty well. Does he have? I'd like a little more color to his comments on GE. He probably doesn't want to do that. What's your expression? What do you say? You criticize by just generally, but you praise by
category.
Criticize by category, praise by name. Yeah.
Yeah.
But
So I guess I can't get you to just slam
their
GE,
10K.
huh? Or ML or
No,
anything, huh?
no, you'll never get me.
No?
You'll never get me to do that.
What a mess, though,
no,
right?
And I haven't seen their 10K yet. I mean, I want to get their 10K as soon as I can, and it may be, it's probably out just about now, and that's the document you have to read.
Well, it's up about 50%
giving
from
you
the
some
lows, I
clues
guess.
about-
More, huh?
Yeah.
More than that, yeah.
But it's you know it's selling, the equity's selling for about $100 billion, and then they actually have a preferred issue that's $5 or $6 billion. Most people don't even know about that. And then they had something over $100 billion of debt. I'm consolidating the GE capital, but I think that's the way to look at it. And they've got a couple of very good businesses. So, but they were over leveraged, and they've got to reduce the leverage, and clearly they're doing it.
I mean, you could write
Warren,
a check
there's
for
a
that.
question that comes in.
Warren, you could write a check for that, Warren, if you really liked it.
That's true.
It's true that you could, but you won't be. Okay, I'll just paraphrase.
There's a question that came in from a viewer, and I asked this because we're talking about GE, and it's one of many companies that's looking at unfunded pension liabilities potentially down the road. This is T54 Control Room. Brian Bannon writes in, how do you see the unfunded pension liabilities across the United States affecting our economy over the next 10 years?
Well, if you're talking about the corporate sector, the unfunded liabilities have been working their way down because all the new companies don't go for defined benefit plans. So you've got, if you take the 4 or 5 largest companies in the United States, they don't have defined benefit plans. We have bought a number of older companies, so we have a fair number of companies with defined benefit plans. We wouldn't start any defined benefit plans, but that it's not a huge problem in corporate America. I mean, you have a Sears, and the Pension Benefit Guarantee Corp gets involved, and there'll be others, but it's way less of a problem than it was 10 years ago or 20 years ago. In the public sector, it's a disaster, and it's interesting to me when they talk about these relocation problems, and New York and Amazon, all that sort of thing. If I were relocating into some state that had a huge unfunded pension plan, I'm walking into liabilities because, I mean, who knows whether they're going to get it from the corporate income tax or my employees, with personal income taxes or what. But that liability isn't going to, you can't ship it offshore or anything like that. And those are big numbers, really big numbers, and they may come. You can delay a long time. I mean, you're getting pushed maybe somewhat. But the politicians are the ones that really haven't attacked it in a good many states. And when you see what they would have to do, I say to myself, why do I want to build a plant there that has to sit there for 30 or 40 years? Because I'll be here for the life of the pension plan. And they will come after corporations. They'll come after individuals. They're going to have to raise a lot of money.
I mean, when you say that, the states that come to mind, having not looked at those statistics in a while, would be Illinois and New Jersey at the top of the list.
Well, as I say, I praise by name and criticize by category.
well, let's talk about the decision of Amazon to say forget it to a second headquarters in New York City. We were with Charlie Munger on that day. This was February 14th, just a week and a half ago. We were with Charlie Munger the day that announcement came out, and Charlie had some pretty firm comments on it. He said he thinks it's crazy that states like California and others are basically driving the rich people out. What do you think about it?
Well, I heard Charlie on that, and he says they don't have kids, they don't, and a good many of them are charitable. They tend to give them things that are around them, and they don't use the services nearly as much relative to their taxes that they pay as the average person. And he says they use the hospitals. Obviously, well, a state like Florida, which has no income tax, attracts a lot of rich people. And in Texas, when people relocate there, the fact that there's no income tax is a real factor. And I don't know about those two states specifically, but I have a feeling that their retirement plans are in pretty good shape compared to the old industrial states. You get legacy liabilities when you move in. Nebraska's in very good shape for a long time. We've really been against the state having any debt. Now they get around that with leasing sometimes. But.
Well, what we're talking about is state versus state.
Yes.
You're now talking about some new taxation plans that are being recommended in Congress or by specific senators or congressmen that are similar to some of those policies that we've seen in the states. I mean, if you just run through it, Elizabeth Warren with her wealth tax on anybody over $50 million, AOC, Alexandria Ocasio-Cortez, with her plan to tax anything above $10 million at 70% rate, Bernie Sanders with his estate tax going up to 77%. If those policies are enacted on a national basis, do you see that same sort of trading off where people would potentially leave the United States? What do you think about these plans?
Oh, well, that's an interesting question. I would say this. If tomorrow everybody in the world had a chance to make a one-time change in where they lived, 2 billion families all over the world, the only time they're going to get the chance to make the change. But they will get transported free to any country they want to go, their family, and have citizenship. What do you think is going to happen tomorrow?
A lot of people coming to the United States.
A lot of people are going to come to the United States. Very few people are going to leave. North Korea might have a small decrease in population. I mean, the point is, this is an incredible country. And it's true that right now we're raising $3.3 trillion and spending probably $4.3. We're going to have a deficit of about $1 trillion in a very good year in the cycle. I mean, a year of prosperity. And that's 5% of GDP, and that's probably more than you can actually take a 2 to 3% deficit and not have the ratio of debt to GDP grow. But 5 in prosperous years, we're out of whack on it. So you can cut spending, you can raise taxes, but I would say that the wealthy are definitely undertaxed relative to the general population.
But your answer that was almost a dodge of the question. I mean, if these policies drive out the wealthy people, sure, if you got your choice of where to go, everybody would want to come to the United States. But would the wealthy people do that if we changed our tax structure?
Well, I think most of the people the rich people, Mark Rich being one of them, I mean, they leave because in his case, I mean, he's leaving before the feds pick him up. I don't think, if you offered most of the rich people, if they were sane anyway, and you said, if you stay, we're going to take half your net worth, and if you leave, you can take it all with you, and you're 88 years old like me, am I going to leave the United States? I could move. South Dakota has no state income tax. Wyoming has no state income. So we've got 2 states that border Nebraska. Nebraska has a 7 and a fraction % state income tax. If Iowa, which is right across the river, had no income, I wouldn't move. I mean, now I think people want to come here. I think if you made that offer I made, the United States, there'd be more people come to the United States than any place else, and they would come if the deficit was $1 trillion or $1.2 trillion. I mean, this is the land of opportunity.
Do you think they're good policies? Do you think they're good tax policies? Yeah.
Warren, you're making a decision to leave all your money to the private sector in terms of charities, and because you think, I assume you think maybe it'd be better spent there than by the government. Isn't it possible that that it's just not the right idea to just what's already a bloated, what some people would think, a bloated entity, address the spending side of things, or else maybe you ought to reconsider. If you think the government is so good at spending money, well, why leave it all in the private sector? Go ahead and give it all to the government and let them do it. You seem to have an idea that it's better treated if you do it philanthropically.
I've got about 4 choices, Joe. I mean, let's say I have $80 billion. I could spend it all, and but even to spend it all, I would have to sell Berkshire stock, so I would incur taxes of 20 or so billion dollars in spending. So the government would then get 20 if I wanted to spend it all. I don't know what the world I'd spend it on. I can give it all to my wife on death, and then there's no tax. I could give 4 million people $20,000 each, and there'd be no there'd be no tax on it as long as I make gifts to separate people up to 20,000. I can do that. There's no tax. One thing you could do, the estate tax is the wealth tax. I mean, in theory, you get taxed on wealth on the estate. Now, you're allowed to give to charity 50% cash, 30% appreciated stocks, and have it deductible from your income. They let you essentially deduct all the gifts of wealth at death. So you could have a limitation that you could only give 50% to philanthropy and treat it the same way actually as if you're giving away from income during your life. There's a lot of things you can do with the tax law. I mean, the tax, and I think that one way or another, when the Forbes 400 have gone from 93 billion to 2.7 trillion since 1982, the market system, as it gets more specialized, will give more and more to the top people. If we were back in 1800 and we were all working on farms, you'd probably be worth a little more than I am because you'd work harder and be stronger. But the top person working on that farm would be worth 1.5 to maybe 2 times what the bottom person was. But as we get more and more specialized, the guy that's the best in knocking out some other guy that weighs 200 pounds is worth $30 million a fight. Now, he's worth $30 million a fight because somebody invented television and cablevision. As we get more specialized, the rich will get even richer. And the question is, how do you take care of the guy who's a wonderful citizen and father may have died at Normandy or something, and it just doesn't have market skills. And I think the earned income tax credit's the best way to address that question, and that means probably some more taxes. It should mean some more taxes for guys like me, and however you come at it, I'm fine with.